Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is July 11th, 2012. Lots to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. Let's kind of take a little zoom in here, and don't you love it when a plan comes together? That's all I have to say. Alright, in the previous videos, I've talked about different scenarios. I've talked about a possible upside, but I wouldn't short until we hit this 137.09, which would have kept me out of trouble, and it most certainly did keep me out of trouble because a lot of people, when this on this day, the day before yesterday, it gapped higher, went long expecting it to hit at least this 137.09 level, or I would say nobody has these calculations, so I would have to assume that they would expect a hit of this level up here, and they've gotten burnt because it intraday came back in and bled out. Okay, I also talked about a possibility of a bearish consolidation pattern, so we've actually gotten both. Okay, so we had this down move, we had this bearish consolidation, and we had another down move just like that. At the same time, intraday we had a bounce. All right, so that still validates these two doji candles, even though it wasn't on volume. Okay, and because the volume wasn't there is probably why we did not tag the higher levels of resistance up here. Okay, so long story short, everything's coming together as planned. Now let's talk about even more in detail these two mathematically calculated levels here, which is the 133.99 and the 133.70. Okay, so the day before it went right into this 133.70 level, and then we got a bounce which showed a definite support there, and I believe I was only 2 cents off on this calculation. Okay, and then now today we actually hit this bottom trend line, and just like I talked about in previous videos, this trend line here, until we break down into this trend line here, I do not expect the markets to immediately come down, and we should get somewhat of a bounce off of these two mathematically calculated levels here. In addition to that, we had these two moving averages here giving it even more support. In yesterday's video, I said after you normally get a big move down like this, even though the actual move was a buck something yesterday, it was actually from the gap up all the way down, which created this huge red candle here. And anytime you have a big move down, just like this move here and then this move here, you normally get a retracement of at least 25%. So let's just kind of eyeball this. This looks like to be about 50%. Half of that was about 25% here. Let me just zoom in here. We got into this 25% level here before pulling back down, and then eventually closing off as a doji candle. Alright, so everything's coming into play. We bounced off this 133.70 level the day before yesterday. We came back down. We essentially tagged this bottom trend line here before we got a bounce, and we closed above this 133.99. So let me show you the intraday. Just keep in mind, as I tell you guys this, how I like the plans, and how everything is just coming together so far picture perfect. It doesn't always happen that way, unfortunately. I wish it did, but just so happens these past few days these levels have been working out pretty well, so I'm pretty happy about that. In any case, let's see, the day before we come all the way down. Okay, this is from this line here to this line here was the day before, which was yesterday. We had the gap up, and then we just bled through, right? We tagged this level here. Actually, we got a bounce off this 133.99. The low of this candle is 133.97. That's a 2 cent difference. So an intraday trade from here to the high of this candle, which was 134.23, that would have given you at least a 25-cent intraday trade. So we got a bounce off this 133.99, and again, use and abuse levels, to me, in my opinion, is never holds up. After we got this bounce, we bled right through it, and then we hit this 133.70 level. The low of this candle was 133.68. That's another 2 cent difference. So again, these two levels were only 2 cents off, and again, once you hit this level, it's no longer valid. We come back up, we break through this 133.99. We kind of get somewhat of a bounce off over here. We actually broke down, but then we did not confirm. We bounced off, and then we came all the way down, and what did we do? We came right into this bottom trend line here, which we saw on the daily chart. Okay, and then we bounced off, and then we went we cut through this 133.70, and then we cut through this 133.99 level. Okay, so what most likely happened was we traded at 141 million today. Our average is 150, so that is below average, and that means that we had low volume today. That gave the institutions a chance to prop the markets higher. Actually, what happened around this time was there were some rumors that came out, and then towards the end of the day, it was just a rumor, and it bled back in, or there was some profit taking there. So, what do I expect for the coming days? All right, I hope. Let's see. Let me just delete these two lines here. All right, so. Um, what's happening now is we came down. Essentially, what happened, we had a 2 day consolidation pattern before breaking down again. Now normally you'll have at least 3 days before breaking down, okay, and sometimes, very rare, you'll get that single day breakdown, okay. And I've explained that to you guys in previous videos that it does happen, but it doesn't happen as much as a 3 day breakdown. So when you have a consolidation period that takes about 3 days like this, then at any time after that, you can pretty much expect an additional downturn as far as the pattern goes. If the pattern is bearish, then after 3 days, I do expect another down move. However, recently it's just been 2 days. Actually, this third day, well, just this third day could be considered still a consolidation pattern, simply because it actually went higher. But that was the intraday. But essentially, it was 2 days consolidation before breaking down again. All right, so we come down, and now there's a possibility that we may start consolidating again. Now that's just a possibility, and like I've said in the previous videos, you have to play the market like chess, because the markets are manipulated. You have to be ready for whatever the market chooses to do. Again, you don't want to take trades unless they're at their premium. Like here, I mean, you wouldn't short the market until it hit this 137.09 level, right? I don't think I don't think I took a short on this market at this time. I don't quite remember, to be honest. No, I don't think so, because it actually broke through, but we didn't confirm. Okay, but this level did hold, and we came down, and I did short Walmart, and I did short Seagate, and I'll get into that a little later. So yeah, I don't have any shorts on the market right now. In any case, these two mathematically calculated levels here are holding up pretty well. We did have this doji candle, but notice the volume. You see this volume? Not too good. You see this volume? Better than the past 5 days, which is probably why we got another down day today. We did get that 25% retracement intraday, but the volume wasn't that high, which tells me that there could be more downside to come. That's definitely a possibility. But like I said in the previous videos, if we do break down from this area here, meaning, the bottom line is, if we close below this 133.77, I'm sorry, this 133.70 level, in fact, then that's pretty weak to me, in my opinion. But if we close below this trend line here, then that's definitely something to think about, because we'll probably be heading down pretty fast and furious down to this level over here at the 200 moving average. Why do I say that? Well, because it's simple. I mean, we have so much support right around here. Again, we have these two calculated levels, we have these two moving averages, we have this trend line that comes up from here all the way down here. I mean, there's a lot of support, and so for it to not bounce off of this support, or at least consolidate right above this support, it's going to show a lot of weakness. I mean, if we start breaking down now after a 1 day consolidation, and we close below this bottom trend line here, then that's showing me that the market is too weak to even the bulls are just too afraid, and the bears are just coming running fast and furious, just ripping shreds apart and just bleeding the market out. Okay, so that's something to just think about. Okay, so there's couple scenarios that I see. We do have a doji candle here. It isn't on higher volume, so it's not an exhaustion doji. So it's going to be like these two dojis here. Everybody thought that we would get a reversal. We did intraday, but it's definitely nothing to be happy about. This is another doji on low volume, but we are into some good support, so we could potentially jump higher. If we do, however, jump higher, I really don't think that we'll pass this 137.09 level. That's just I would be very surprised. Obviously anything is possible, but I would be really surprised if we even get there, and I'll be absolutely shocked if we actually close above it. Now that would entail a lot of rumors and news that to come out if that was to ever happen. But as long as the news stays kind of neutral right now, then I highly doubt that's going to happen. What I do see, however, is a possibility of a consolidation. So two things I see. We get a consolidation pattern, either slightly up to straight sideways like this. We consolidate for 3 days. Again, that's my normal rule. I will not enter in a short trade unless there's at least a 3-day consolidation pattern, whether it be a bear flag or a bearish consolidation pattern, before heading down longer. Now, the longer we consolidate, all right, just keep in mind, the longer we consolidate, the more power it's gonna build up to be able to push down and break down from this bottom trend line. Again, if we ever close below this bottom trend line here, and especially if we close, that's showing a lot of weakness. If we close to confirm the next day after, then that's just to me, Fast and Furious is coming straight down over here, and that's just my opinion, unless they start mentioning QE3 or whatever they Ben Bernanke wants to do. Okay, and so that's the first scenario. The second scenario is we get somewhat of a pop based on news or rumors or whatever the case may be, and we may start trading higher, but I doubt it's going to pass this 137.09 level, okay, before we start coming back down again. And the only reason why I think that we may actually start heading up higher, at least to a 50% level of the previous day, is because we are into some pretty major support here. Okay, so that's just still a possibility. I am still short on Walmart and Seagate, so let's get into that. But before we do, let's take a quick look at the dollar. This is the chart, daily chart of the UUP. Let's take a quick look here. We had this. You know what? I should. That's good. I brought up this chart. I wasn't able to really do anything, but we went right into today. We went right into this double top. So we could be actually pulling back sometime tomorrow. And again, if we pull back, then the markets should catch a bid tomorrow. Should that validates either a consolidation pattern or a possible small bounce on the SPY. However, if we break through, you know what? This is a possible. Okay, let me revise what I'm saying. We have this up move. We have this consolidation pattern right here. It's a bullish consolidation pattern. This will give it enough juice to break through this double top here. We already got a pullback off of this double top intraday. So this line has already been tagged, which means there is a possibility that we could actually break through, giving even more weakness in the market. So to validate, let's take a quick look on the DX. Alright, this is the daily chart of the US dollar once again, but this is a different chart. Okay, so we have this this top here, and we are certainly right into this double top. We actually pierced through it, but we could not close above it. And then today it looks like what's the high of this candle? Candle is 83.67. The close of this candle is 83.68. So we actually closed 1 cent above it, which means really nothing at all. We did get somewhat of a consolidation pattern over here. It's not really that much. I mean, it's a 2-day consolidation pattern, and it looks like there is a slight possibility that we could break out of here. And again, I do have a target price of 85.23. Oh, I'm sorry. This let me take that back here. This candle here is actually after hours trading. So technically speaking, we did not break through yet. If we hold this level until tomorrow, then yeah, well, we would have broken out of the double top. And if we close again on top of that, so tomorrow would be Thursday. If we close above that again on Friday, then we'll definitely be heading to this 85.23 pretty quickly, and that would coincide with the big drop on the SPY if that happens. Okay, but if this double top holds up, we do have a pullback. We will have some support here at the 20 moving average, unless there's something dramatic that happens. And if the 50 moving average comes up at the same time, then we should get a bounce up, breaking through this double top level over here. So just keep that in mind. That's something that you want to watch. Alright, this is the infamous Walmart, and again, and I've been saying this, I've been saying this over and over again, and I've been telling you guys this, and it's almost like, why don't I listen to myself? I don't know, I really don't listen to myself for whatever reason. In any case, I didn't listen to myself, and now I'm not getting burned right now, but I am, not really worried in a sense where I'm gonna lose a lot of money, because I do have money management in place. So if Walmart does go against me, I stop out for a small loss, not a big deal, right? So in any case, let's do a quick analysis on Walmart. I did take a short on Walmart around here, as I said in the previous video, which was yesterday's video. The close of this candle was actually at 72.26, which is 4 cents above my calculated level, which is 72.22. I did say, however, the 72.93 or 92 level was the level that I wanted to short it on, so I kind of actually shorted a little bit early. So I'm not gonna stop out until it goes above there. I mean, and that's not even $1 a dollar stop. Okay, now we did create this doji candle yesterday on higher volume, which was good. It wasn't a dramatic higher volume, which is something that I want to see, but it's definitely higher volume than a lot of previous days. So that's the reason why I took the short, and plus it was close to this upper trend line here, so that validated a good short. But again, and this is what I'm trying to say. You want to short weak stocks and go long on strong stocks. Okay, that's the bottom line, because when the stock is strong, any kind of bid that the market gets, like the SPY caught a bid towards the end of the day. As if you rewind this video, you'll see at the end of the day on the 10-minute chart, the SPY caught a bid. Walmart was down with the market all day today. Towards the end of the day, let me just show you. All right, this is a 10-minute chart of Walmart. All right, towards the end of the day, right here, it started right here, but it didn't really happen until it recovered above these two moving averages. Towards the end of the day, it just caught a huge bid. I mean, that's based off of the SPY catching a bid. You know what I mean? So as long as the SPY catches a small bid, then Walmart is just gonna make a huge bid, because these are going to be the stocks in relative strength. And so if the SPY catches a small bid, then obviously stocks like Walmart and Apple and all those bigger stocks are going to catch a huge bid, because those are the stocks that are going to be market leaders when the market catches a bid, right? Hence, the fact that you want to short weak stocks and go long the strong stocks. Okay, it only makes sense to do it that way. Obviously, I don't listen to myself, so I shorted Walmart a little bit too early. So we are still going a little higher, but we did not close above the yesterday's candle, so that's kind of good news. So I'm just going to monitor Walmart for now. And by the way, I am still in the money on Walmart, so it's not so bad right now. It's just not what I expected. I expected, at least a pullback into this bottom trend line over here, but that didn't happen. So we'll see if that happens this week or not. Just keep in mind that I want to remind you that next week is the week that options expire. As you can see today, volatility has picked up a bit. Volume is still low, but volatility, as far as price movement within the market is increasing. As you can see, towards the end of the day, we had that huge pop, and then we had a big sell-off towards the last 10 minutes of the market trading day. So I mean, there is a lot of volatility starting to pick up. So just remember that next week is going to be very volatile, and that's when the institutions are going to start whipping people out of their stops and stuff like that. So that's just something that you want to keep in mind. All right, this is a daily chart of Seagate. All right, and this is also, I took a short right here at the 26.18 level. So I'm still obviously in the money on this one, and I did say that we'll probably get some pretty good support at these two calculated levels here. We didn't quite get there, and we actually created this nice doji candle. If you look at the volume, however, it was very low. So I don't really think that this doji candle is going to be a reversal candle. However, obviously anything's possible. But this 26.18 level here is probably going to see some resistance. And the one thing that I do like about the Seagate technology is, as a reminder, that 26.18 level coincides right into the weekly chart of the Seagate technology at the 20 moving average there. Okay, so that's why I really like the STX. STX is still a stock in, kind of in strength. It's not strong like Apple, but it's definitely a stock in strength, relative strength, but not as strong as Walmart and Apple, which is why another reason why I took the Seagate short. Last but not least, this is a daily chart of Apple. I'm just going to make this as quick as possible here. Again, we didn't confirm above this candle here, so we broke down back into this this rising wedge pattern here, and you see the 649 calculated level that's holding up pretty well. We got a small pierce and then we recovered it. Again, Apple, to me, unless it breaks down from this this trend line here, which could be possible on the next move down, but doubtful, simply because we have earnings very soon on the 24th, and next week is options expiration. Apple could easily just pop higher, and that's just something you have to keep in mind. But right now, there's a possibility that we could come all the way down into this bottom trend line here. We could actually come all the way down into this 50 moving average. This 20 moving average to me is going to be minor, but again, this is a stock in relative strength, so we could actually get a bounce off this 20 moving average and continue higher and actually break out and of this rising wedge pattern, which would indicate a pattern failure. And if a pattern failure happens, the move is normally quite large. Okay, so That's it. This is your 7 minute market update. In the next video, I'll probably talk about other stocks other than the ones that I'm in now, and I'll just update you if I either sell it or buy into additional stocks. That way, I don't have to always talk about the same thing over and over again. And anyways, thank you very much for watching. God bless to you all, and I hope to see you in the next video.